Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, we have some questions that people would like to have answered. Samantha from Hamilton asks, we're faced with a dilemma. If we wait until after June 1st, we won't be able to qualify to buy the home we want priced at $499. We can afford much more, but as Ross says on the show, the rules no longer allow us. The question is, should we act before we are prevented from buying this home that's just under $500,000?
Yes, you have a dilemma, Samantha. That's absolutely true. You've got the same dilemma that everybody who is out there considering buying a home or moving up the property ladder is faced with. Yes, it's true. When the new mortgage qualification rules come into play on June the 1st, I'll take you at your word, you're not going to be able to be qualified to buy a $500,000 home. And I also respect 100% that it's insane that they're telling you that you can only spend as a least amount of money as the government is approving you to spend right now. So your other question is, should we act before we are prevented from buying a house? Well, let me explain it to you this way, because you're going to be the one that has to live with this decision over the next 6 months, year, 5 years, 10 years. If you go back and you listen to every time a mortgage lending rule was changed, i.e. the mortgage qualification rate, 2017, for first-time buyers, mortgage qualification rate that followed up for trade-up buyers. Every single one of the times that you heard that, you heard the following. You didn't hear it just once. You heard it hundreds of times. You've seen it on hundreds of websites, and the government itself has repeated this falsehood. Your buying power will be reduced. Remember, Samantha, when you were told that? Remember when you have heard that repeated over again, that it was going to reduce your buying power? Well, here's what I want you to think about. If it reduced the buying power, why didn't house prices drop? Think about it. We're now 4 years into this situation. You can go back and see hundreds of articles, blogs, news reports, headlines, recordings, where they say that your buying power was reduced because of these new mortgage qualification rules. CMHC bragged about it. Evan Siddell bragged about it. Everybody bragged about it. Oh, this is going to curb the housing market because you have less buying power. Well, what happened? Just the opposite. So they tell everybody that you're going to only be able to buy a cheaper home, but then the average price magically goes up. And it's gone up since the first time this rule was implemented. And when you look at the data the way that we look at the data, it's unbelievable, the correlation. A reduction in buying power leads to a higher average price. Now, why would that be? What was the one thing that all of these guys, girls, analysts, organized real estate, what did they get wrong? A reduction of buying power should lead to a lower average price. Only makes sense. If everybody is spending less, the prices are going to drop. But just the opposite happens. Just the opposite happens, Samantha. Why? Well, this is why. Let's say June 2nd, you no longer qualify to buy a $499,000 home. And now you qualify to buy a $450,000 home for the sake of the argument. Now, you can afford to own a way more expensive house than $499,000, because if you simply borrowed money the same way that your parents did 40 years ago when they were buying a house, you could afford to buy a much more expensive home than $500,000 today. It's only Evan Siddell and Tiff Macklin and Christina Freeland who have told you, oh, no, your parents were irresponsible. Your parents were just so foolish. They were so imprudent. We can't allow you to do the same thing. We can't allow you to do the exact same thing millions and millions of Canadian families have practiced for the last 40 years. No, you can't do it. Well, what are you going to do? Are you going to buy a $450,000 house because your buying power is reduced? Of course not. You've answered it in the question yourself. You're not going to be able to buy that home. You will be prevented from buying it. Now, what happens to the average price when you reduce the buying power of those entering a housing market? Well, what they do is they don't buy. And when they don't buy, the average price goes up. Because the only homes that are selling, or the share of sales that are ongoing, are only going to the more expensive home. A lower buying power, which was universally attested to by organized real estate, the mortgage brokers, the governments of Canada, everyone, for lowering your buying power, actually causes the average price to increase. That is simply common sense when you understand how the share of sales works. So this is true, Samantha. You may not be able to qualify to buy this home based on the way that you've been directed to believe. Now, what I can tell you, Samantha, is this. You can afford to buy the same amount of home that your parents did. It just may cost you a little bit more interest to do so. But what I will also tell you is this. You need to understand how the housing market is structured in the province and the city or town or community that you're looking to buy in. Because this mortgage change is not the same as all the mortgage changes that happened before it. We are in totally different stage of the trading cycle, which also happens to be a once-in-history occurrence that all provincial markets, all regional markets, all municipal markets are at the exact same point in their own trading cycle. As I've said on the show before, this is an opportunity for everything to be debunked. Now, let's go over this once again, Samantha. They're going to reduce your buying power. Over the weekend and early this week, you're going to see non-changing, always the same reports stating about your buying power is going to be reduced on June the 1st. Rush out and buy a home today. Now, your buying power, if everybody's buying power, which is what's happening, because this is an insured and uninsured mortgages. First time since 27, the first mortgage qualification rate was instituted. This is the only time where it's universal across all categories of buyers. The universal buying power of all buyers in the market right now is being dropped. Well, we better see a reduction in the average price, shouldn't we? Now, we also have to take into consideration interest rates. But what's the beautiful part about after June the 1st, Samantha, is for the first time in history, the only variance in the mortgage qualification rate that is going to be applied is depending on what city you live in, because your property taxes are different from city to city. Every other factor is going to be identical coast to coast. There is no way of manipulating this. The low amount of gross debt service ratio that is effective in this current new 5.25 mortgage qualification rate is going to cause people to borrow as much as they can under this format. And it's not what you think it is. It's higher, but I'll explain it to you this way. All of the rule changes that have been taking place, all of them, including this one when it's enacted, well, not including this one, this one's going to do a little bit more, okay? It effectively removed 12% of the home buyers in a market, first-time buyers. So let's say you had 100 first-time buyers, 12 of those buyers no longer were able to buy a home. That also meant at each category, as you're trading up, because of a result of that, more expensive homes were being purchased on each step of the property ladder, because the cheapest homes were no longer being purchased. All of what you've seen since actually going back to January 1st, 2016, when Morneau first issued the increase of 5% on down payment for homes between $500 and $1 million. You need to come with an extra 5% down. 5% wasn't no longer enough. Once you got over 500, you needed 10%. He cut out buyers from the market. And with each consecutive change, they cut out buyers from the market. They reduced their buying power. And each time, prices went up. Now, if this had anything to do with house prices, you would expect the exact same thing to be happening going forward. I guess, Samantha, you're going to have to make a decision. Do you think that's going to happen? Or do you have access to where we are in the trading cycle right now? I'm assuming it's in Hamilton when you're looking to buy. And do you know where it is? Because that's what you need to know to what's going to happen with prices going forward, and then whether or not you can live with yourself. There are other reasons why you may or may not decide to buy that house, Samantha, before June the 1st. You can certainly get pre-approved, and it's possible your bank would allow you to buy it throughout June and even into July. And the rules are set that that would be possible. But I'm assuming, based on the Hamilton market, it's a good house, and if it was really that good of a buy, it's probably already sold. But obviously, if you're putting this question forward, I guess that story isn't true either. And that's really what the question you have to answer is, Samantha. Where are you getting your advice? Is the advice that they're giving you provable? In other words, here's the advice, here's how it results, and if you believe that a reduction of buying power since January of 2016 did not result in higher prices, and it may result in lower prices after June 1st because the trading cycle's changed, how the heck do you make up your mind? That's what realtors love. They're salesmen, and they'll sell you a house today, tomorrow, or yesterday. Good luck.
Ross, this harder to qualify to buy a home thing, though, kind of fits into the conspiracy theory that the government wants to take away your right and ability to own a home. They're making it impossible for people to get into the market to own a home. Eventually, no one will. Is that what they want?
Okay, so this is a totally different question, Jim. But,
well, it's my question is that their aim? Next, it won't be a 5.25 mortgage. Next, it's going to be 6, 7, 8, 20, 50%.
Okay, so if I was a conspiracy theorist, okay, and I believed that our government officials were this smart, which I may have 8 years ago, but which I no longer believe today. Let me put it to you this way. If throughout history, Canadian families have spent 32% of their pre-tax income owning a home, and the government said, you know something, when they're paying 32% of their income to their house, it's really hard for us to raise taxes. Really hard for us to raise taxes. How could we put Canadians in a position where we could charge more taxes? What if we simply quit letting them use as much as their income towards their house? What if we go with this, housing affordability is determined by 30% of your income? Considering generation after generation after generation of Canadian families spent way more than that, when taxes were way higher, when wages were way lower, what could your plan be? Is it possible, Jim, that this is really what's been going on? Now, I don't believe these people are intelligent enough to have this plan, Jim, but when I extrapolate this out, the only logical reason from breaking from 50 years of prudent home ownership decision in terms of use of your income towards your home and paying down your mortgage debt that I could come up with, where they start to say, it's great to rent a house for the rest of your life. There's nothing wrong with that. Don't be embarrassed. The only reason I can come up with is because they want to tax you more. They want to put you in a position where they can tax you more, where they can take more of your money and they can spend it how they want to do it. Well, if they own your home, affordable housing, and they have now structured this so that you're only spending 30%, 28% of your income on the house, leaving an extra 4 to 6 to 8% available for taxes, that would be an interesting idea, wouldn't it, Jim?
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, why has the OSFI and CMHC announced switching to another increase in qualification standards? What's the reasoning behind it?
Okay. So it's not the reasoning of my conspiracy theory from the previous section. Although, as a mathematical model, what I said about being able to tax families more is only possible if you reduce the cost, the amount of their income they're spending on housing. So that is a mathematical truth. But the reason why the OSFI had to step in was simply the following reason. Canadian banks are profit-seeking corporations whose sole goal is to generate profits for their shareholders. And they are ruthless in this. Their bank presidents, VPs, all get their bonuses based on the amount of profits they're able to add to the bank's shareholders every single quarter. So what the banks do and have done is that they have always acted in a manner to generate the most profits possible. That means they've manipulated mortgage interest rates as talking points. So what I mean to say by that is that from the 1980s forward, and progressively, increasingly so, the banks have utilized mortgage interest rates to generate profits for the bank by manipulating Canadian home buyers. They have done this nonstop, which is why the OSFI had to act in the first place back in 2017. The OSFI was not aware that Canadian banks were breaking from standard, prudent home buying practices when qualifying home buyers for the mortgages. What was normally a 32 to 34% maximum gross debt service ratio, even though 39% was the legal max, banks historically never did that. Because Canadian home buyers are prudent people. They normally don't stretch themselves that way. But commencing around 2015, 2016, they were stretching themselves that way because the realtors had given them the narrative that if you don't buy now, you're never going to be able to own a house. The OSFI saw this, and then they saw that what the banks were doing. The banks were stretching gross debt service ratios up to 37, 38, 39%. I never sold a house to thousands of home buyers at 39% gross debt service ratio because I explained to them why you shouldn't do that unless you were a high income earner and it was this was your third or fourth home. In that case, usually life is structured in such a way that there's no risk with that either. But you would never do that with a first time home buyer. Well, the banks were. So the OSFI stepped in. The OSFI stepped in and they set this rule. Okay, we're going to create a variable gross debt service ratio, which is effectively what it is, that will be tied, will increase. In other words, the impact of the rate, the mortgage qualification rate, increases as rates drop and decreases as the rates go up. Well, lo and behold, the banks changed again. And when the 5-year lending rate should have increased, meaning the posted rate should have increased over 5%, the banks didn't move. The spread methodology that they have used, I guess, for the last 6 years, they no longer let it apply. They started to hold the 5-year posted rate at 4.79%. And what it should have increased as the lockdown set in last year, the banks didn't move it. Their greed is overwhelming. Their need to drive shareholder profit is overwhelming. The OSFI had no belief, no understanding that the banks were going to act this way until a year later, and they found out that they did. That's exactly what they did. They manipulated the rules and regulation to the profit, for the profits of their shareholders. Jeremy Rudin's hands were tied one more time. He couldn't leave office because he's leaving the OSFI with the banks doing this, tearing down some of the work he had worked hard to do. So he was forced. They forced his hand to establish a 5.25% max. Guess what, folks? A 5.25% max is the mathematical rate that every housing policy should be rooted around. It should range between that and pi times 2. Okay, so you do the math. Pi times 2. That's what the maximum policy should be set around, because the other market fundamentals will eliminate the highs and the lows between that range. What Rudin did, he's come in and said, okay, here's the rate, because the banks refused to follow the methodology they had been using before we introduced the mortgage qualification rate starting in 2017. So the banks now are faced with this. The only difference this time is this. The trading cycle, when the rate was instituted in 2017, was totally different in the key markets than what it is today. This will be the first time where Rudin is instituting a change, the very, very, very first time since 2013, that any change to policy has been implemented at the correct time. We just reported the first month of negative house price growth between March and April. That was the first time that's happened. The sales mix, purchase mix across each province is aligned right now in a way that has never been aligned so similarly. So this rule change is coming to an effect right now. Mr. Rudin is going to leave his office at the OSFI having a home trading infrastructure for the first time in history that the banks can't manipulate. So what I mean to say is this, Jim. Since I started in the business back in 1987 through till June 1st, Canadian banks have been able to manipulate the Canadian public, the Canadian home buyer, the housing narrative in this country. Mr. Rudin, as he's leaving office, has established for the first time in that entire period a home trading infrastructure that has a set of rules. Unless governments change the rules that he has put in place, the entire home trading infrastructure will be revealed for how it works. Anybody with an AI program will be able to plug in the spreadsheets, run it through IBM Watson or whatever, and you're probably going to be able to start to see the trends. Now, I don't know how those programs work. I don't know what kind of inputs you need to make to them. But to me, the way that we understand how housing markets work, that is possible. Mr. Rudin has done this by establishing a 5.25% floor and a 2% increase. He has established how the home trading infrastructure will begin working, for the sake of the argument, mid-July, and will continue to work until some ignorant politician comes along and changes it.
Ross, last week, Tiff Macklem claimed that house prices were a result of extrapolative behavior of home buyers. John from UBC, the University of British Columbia, asks, we study housing markets and we support the view that current house price gains get extrapolated into beliefs that future house gains are inevitable. I agree these are theories and no proof exists to prove it, but why do so many in the field of housing agree with this premise?
You agree with it because you can't explain it. I mean, was there anything more ridiculous, John, than the Bank of Canada issuing a report, than Tiff Macklem standing on national television and claiming that people are extrapolating future house price gains, and that's the reason why house prices are going up? Is there anything more just absurd? Canadian home buyers are told, and were told, house prices are up 20, 30, 40%, whatever the story is this month. They have been told this incessantly from 2013 forward. There's no extrapolativeness nature of this. You're looking at actual average purchase price being assigned to something other than a shift in the sales mix. The Bank of Canada, their research team, 3 people, sat down and came up with this report, quoting dozens of other people, other housing research, where they simply can't explain a simple mathematical function of an MLS system. And they try to blame it on something else. Oh, the reason house prices are going up is because people think house prices are going up, so they're paying higher prices based on that opinion. Well, that's not the truth. That is an outright lie. Canadian home buyers are told each month how much house prices go up. They don't really go up that. Nobody can prove it, but they're told that. The next month, everybody believes what they were told the previous month. And then they make a buying decision to spend maybe a little bit more money. Oh, this house is really worth $109,000. It was only worth $107,000 2 months ago. Okay, so they spent $2,000 more. I'm using a low number to make it obvious. They're not extrapolating anything. The local real estate board then reports it's a $2,000 gain. It's got nothing to do with extrapolation. It's what home buyers are active in a month, what kind of houses they were buying, and whatever that number comes out to be. And that's a cyclical pattern. It is a pattern that has repeated itself over and over and over again since 1980. And it probably happened before. I just don't have enough accurate data available to prove that. Now, you say, well, Ross, what are you talking about? Like, extrapolated. Well, look, folks, if you went back to British Columbia, I mean, this is the fun one because the show is from BC. And if you look in 2016, February 2016, right, the average price was announced as being $780,000. Now, a month later, the following February, the price supposedly had dropped to $690,000. Go back and find one news headline that was saying house prices dropped, what's that, dropped $90,000. House prices dropped $90,000 in British Columbia. You're not going to read it. And check the month later, in March, because, I mean, that was even a bigger decline in March, wasn't it? Yeah. That decline was, that was another $180,000 that decline was. And then magically in April, the spread was only $20,000 lower. And then May, magically, house prices had gained year over year. Everybody in the province believed it. Everybody in the country believed it. The government of Canada believed it, but because they included it in their own publication. This is the nonsense that you get when the economist talks about a market that they have no understanding on how it works. Where were the reports back in 2017 about house prices correcting $100,000? Well, let's pick the best month, January, because prices dropped $130,000 on average. Don't appear. Gone. Forgotten. Why were they forgotten? Well, because the sales mix wasn't functioning the same way in 2017 as it was in 2016. And then by June, because of that difference in where you are in the trading cycle, you got a positive spin year over year. So after a few months of $100,000 drop in prices, you were able to claim, oh no, prices really went up. You didn't see a single report from the Bank of Canada explaining this. You haven't seen one home buyer in British Columbia explain this. You didn't see B Korea do it. You didn't see Real Estate Board of Greater Vancouver do it. You didn't see a single realtor in British Columbia do it. I'm just reading the numbers of their own numbers. These are not even our adjusted numbers. These are their raw numbers that were issued on those days. In January of 2016, they announced the average price was $753,000. And a year later, it had dropped to $621,000. $130,000 drop. But organized real estate buried that in the next 3 months because of the way that the trading cycle moves and because you couldn't compare that January 16 against January 17. In the same way, you couldn't compare January 17 against January of 18 or any 2 Januaries. This is the nonsense that the Bank of Canada believes. Why didn't they come out in this SFR and say, our research shows that between January of 2016 and January 2017, the average price in British Columbia dropped $130,000. We don't know why, but it dropped. And then magically, by June, it had increased by $30,000 year over year. Well, they can't explain the simplicity of a housing market. They don't know how the home trading market works. The past disappears, as we said in the show before. Organized real estate is built to have you only ever look at 1 year-over-year single-month comparison. Other than that, all they ever talk about is the end of the year. Everything else disappears. They try to fudge it. Oh, over the last 10 years, the average sales were 500, and this month it was 490. So really it's only off by 10 sales. It's a sales pitch. A real estate salesman, a real estate broker, is a real estate salesperson. They are salespeople. The Real Estate Board of Greater Vancouver is an association for salespeople. The British Columbia Real Estate Association is an organization, a trade association for salespeople. Korea, the Canadian Real Estate Association, is a trade association of salespeople. Korea, Real Estate Board of Greater Vancouver, the Toronto Real Estate Board, Ontario Real Estate Board, all produce marketing materials called statistics for their salespeople members. That's why in June, no one was questioning how prices could drop $130,000 in January and now be up $30,000. Well, of course, they can't explain it themselves. Greg Klump was conned in 1992 when he joined organized real estate into believing seller beneficial housing market metrics were actually measuring a housing market when they don't. They never have. But Klump was an economist, so he believed it. Here we have today the Bank of Canada coming out last week blaming house price growth on extrapolative behavior of home buyers. Oh, I heard prices are up 17% this month, so they're going to be up 17% next year at this time, another 17%. I better buy now, and I better pay a higher price, because even if I pay 5% more today, the house is going to be worth 17% next year. Oh, crap. I've never sold a home to a single home buyer who ever believed that nonsense. Now, maybe because they were told the truth, they didn't believe it, but it had nothing to do with extrapolation. When you're sitting with data on your own charts, Bank of Canada, on your FSR, which show house price illusion, average selling price, and you're pointing to that and saying, oh, that's a result of extrapolative behavior, or exuberance, the other one. Understand what you're actually saying. The sales mix created this house price illusion. It's on this chart, but we're going to blame it on something else because we don't know how to measure a simple sales mix. But then again, you know what, Jim? They believe that if you lower the buying power of Canadians, it should be leading to lower house prices. When in fact, if you do so at an inopportune time, it actually causes average price to increase. You only have to look back to every single change that was put in place since Bill Morneau started on December of 2015 for the added 5%, which cut every policy change, cut the buying power of Canadians. What happened was prices went up as a result.
Ross, thank you so much for the update.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.